Crypto investing is changing faster than anyone expected, and today's topic might be the biggest shift we've seen in years. Crypto ETFs are finally here, and they're opening the door for everyday investors like never before. Before you even think about skipping this video, ask yourself one thing. If the next major wave of wealth is built through crypto exposure, would you want to miss it just because you didn't understand where to start? Stay with me until the end, because the 5 ETFs on this list can help beginners get into crypto in the safest and simplest way possible without needing to know anything about wallets, private keys, or exchanges. And the final ETF on this list is a game changer that most people still don't know exists.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
Let's begin by clearing up what a crypto ETF actually is. A crypto ETF is basically a basket you can buy on the stock market that gives you exposure to crypto without you ever owning the coins yourself. You buy it just like a stock. It sits in your brokerage account. And instead of being responsible for security, storage, or complicated transfers, the fund handles all of that behind the scenes. Simple, clean, beginner-friendly. But here's the catch. Not all crypto ETFs are the same. Some hold actual crypto. Some only track the price. Some hold multiple coins. Some only hold Bitcoin. Some focus on companies building the crypto ecosystem. And choosing the wrong one could make you lose money even when the crypto market goes up. So pay close attention to each ETF and think about which one fits your goals the best. Also, before we get too deep into the list, what is the number one thing stopping you from investing in crypto? Is it the risk, the complexity, the fear of losing money? Drop your honest answer in the comments. Your thoughts might help someone else who feels the same way. Now let's jump into the first ETF on the list, the one almost everyone recognizes. This is the big one, a pure Bitcoin ETF. A Bitcoin ETF gives you exposure to the world's largest, most established digital asset. It tracks the price of Bitcoin almost perfectly, and because it's regulated through traditional markets, beginners feel a lot safer getting started. It's simple. If you believe that Bitcoin will still be here in 5, 10, or 20 years, this is one of the easiest ways to own a piece of that future. And the best part? You don't have to worry about managing private keys or losing your coins forever. The ETF does the heavy lifting for you. But here's something worth thinking about. If you had invested even a tiny amount into early Bitcoin 5 years ago, how much would your life look different today? Would you have more financial freedom? Would you take more risks? Would you be less stressed about your future? Think about it and share your answer in the comments. It's interesting to hear how people reflect on missed opportunities. Now on to the second ETF, and this one focuses on Ethereum. Ethereum is the backbone of decentralized apps, smart contracts, NFTs, and most Web3 technology. Some investors even see Ethereum as the digital version of oil, something many applications need to function. An Ethereum ETF lets you get exposure to this massive ecosystem through traditional markets. Beginners love it because it gives them a diversified type of crypto demand, not just digital gold like Bitcoin. Ethereum is the core of crypto innovation, and this ETF makes it accessible to anyone. But let me ask you something. Do you see crypto becoming a bigger part of everyday life in the future? Or do you think it will stay niche? Drop your prediction in the comments. Future viewers might come back and see whether you were right. Now let's go to the third ETF on the list. This one gives you a blend of crypto exposure by holding companies deeply involved in blockchain. Think of businesses building mining operations, developing crypto hardware, or creating blockchain software used around the world. Instead of holding coins directly, this ETF invests in the industry surrounding crypto. Why does that matter? Because even during times when crypto prices dip, these companies often continue to grow, innovate, and build new technology. That means your investment isn't tied only to the price of a coin. It's tied to the expansion of an entire tech sector. This brings up a powerful question. Do you prefer investing in the technology behind crypto or the coins themselves? Which one feels more stable to you? Share your answer in the comments. I'm curious to see how investors think differently. ETF number 4 is perfect for anyone who wants broader exposure without having to pick specific coins or companies. This ETF combines several major cryptocurrencies into one basket. Instead of betting everything on Bitcoin or Ethereum alone, you get a mix, sometimes including coins like Solana, Cardano, or others depending on the fund. This spreads your risk while still giving you upside to crypto growth overall. It's like creating your own mini portfolio, but packaged neatly into a single investment you can buy with one click. Now let me ask you something important. If you had only one chance to build a simple, long-term crypto portfolio for the next decade, would you pick a single coin, or would you prefer a diversified mix? What would your strategy be? I'd love to hear your take in the comments. Before we move to number 5, the most interesting and underrated ETF on this list, take a second to hit that like button if you're learning something new. And if you enjoy videos that break down finance and investing in simple, easy-to-understand language, consider subscribing. It helps the channel grow and keeps this content coming. Also, share this video with someone who wants to invest but feels overwhelmed by crypto. You might help them start their journey. Now, our 5th ETF is one that most beginners don't even know exists yet. This ETF uses futures contracts to track crypto prices instead of owning coins directly. While it sounds complicated, the simplest way to understand it is this. The ETF doesn't hold Bitcoin or Ethereum, but it tracks their price through regulated futures markets. Why is this a big deal? Because futures-based ETFs can sometimes move differently from spot-based ETFs, especially when the market gets volatile. Some investors use this as a strategic advantage. Others prefer it for regulatory reasons. But what matters for beginners is this. It gives you crypto exposure without the fund ever touching the underlying asset. This can be a useful tool when you want crypto-linked performance, but you're not ready to commit to direct coin ownership. This raises another question. Do you trust traditional financial structures more, or do you trust decentralized crypto systems more? And why? Your reasoning might spark a great debate in the comments, so share it below. Now let's talk about the big picture for a moment. Crypto ETFs make investing easier, safer, and more accessible. They remove the barriers that used to scare beginners away. No complicated wallets, no confusing interfaces, no fear of losing your keys forever. Just simple, regulated investment vehicles you can buy the same way you buy any stock or ETF. But remember something crucial. Even though ETFs make crypto easier, they don't eliminate risk. Crypto is volatile. The market moves fast. Prices can swing dramatically. But that's also why so many investors are excited. Volatility can create opportunity if you stay informed and patient. Here's something to ask yourself. What kind of investor do you want to be? Someone who waits until crypto becomes mainstream and predictable, or someone who positions themselves early while the market is still developing? There's no right or wrong answer, but your mindset shapes your financial future. Share your thoughts in the comments. I love seeing how different people think about timing and opportunity. As we wrap up, let's recap the 5 types of crypto ETFs beginners should consider. Bitcoin ETFs for digital gold exposure, Ethereum ETFs for smart contract technology, blockchain-focused ETFs for companies building the ecosystem, diversified crypto basket ETFs for broader exposure, and futures-based ETFs for strategic flexibility. Each one serves a purpose. Each one offers a different way to begin your journey. If this video helped you understand crypto ETFs better, hit the like button. And if you want more simple, beginner-friendly investing content, subscribe to the channel and turn on notifications. It tells me you want more videos like this, and it helps this community grow. And share this video with someone who wants to invest but doesn't know where to start. Before you go, here's a final question for the comments. Which of these 5 ETFs do you think is the smartest long-term pick and why? Your answer could inspire or help someone else who is just starting out. Thanks for watching, and I'll see you in the next video.